So welcome to today's market review for the week. I've been following this week and it's Monday. Yeah, Maurice, welcome. So I wanted to go through uh, dollar indices, gold, then pound. Maurice, can you mute yourself? Maurice, can you mute yourself a little? So as usual, before we get started, we usually go through the economic calendar. Let's watch there kidogo. Maurice, kindly mute yourself. There's a lot of noise. Thank you. Let's proceed. So looking at the economic calendar, this week we have on Monday there's only NZD news that already happened. Then Tuesday there's some news. Going into Wednesday there's CPI, Thursday unemployment claims, and Friday no news. So for me this week I'll have to see today no trading on Monday, Tuesday there's trading, then on Wednesday trading day, Thursday trading day, and then Friday no trading day. So as I anticipate this week, on Wednesday is when you are going to have some major moves, and tomorrow as well, PPI, and Fed chair will be speaking at the same time. So this week, Tuesday, Wednesday, Thursday is a trading day for me, except from today, this Monday and Friday. Then going into so that is it. So let's get started on the reason why I look for high impact news is because they bring volatility into the market. Okay, so market tend to be in a quick run. You get into a trade, you don't hold it for long, and this is for intraday traders. For those who are in trading, you don't need news for you to get into your trades. Okay, so let's proceed. Going into getting started with the dollar index. On a monthly perspective, as usual, just to recall last week, this is what happened. Just a minute. I want to have a clean chart like this. So let's proceed. So going into this week, I'm looking at dollar here, and toka alafu mimi sina shida. I think it's your end. Is it now back? I think it's from your end. Yeah, I wanted to have something like this. Sorry. So now we're good. So looking at dollar this week, welcome everyone. Looking at dollar this week, on a monthly perspective, we start off our analysis top down. We had this fair value up here, which failed to offer fair value. So I've been looking at dollar in terms of this buy side liquidity here on a monthly perspective from this point here. Okay, that's my outlook on it, but I'm still long on it. So on a monthly, I'm looking at this ERL, external range liquidity, on a higher time frame, right there. Looking at that. Then on a weekly perspective, if you remove this, we are in a overlapping zone still in this fair value gap. You see fair value gap right there. Ideally, most of the bodies are closing inside that fair value gap. All the bodies. So going into this week, was still interested in seeing this being our target ERL, so that from this fair value gap there, we target the external range liquidity. But I'll love to see this fair value gap still holds price. This for fair value gap to hold price. So apparently, I'll love to see on a daily time frame because we are in an overlapping zone. my discount array. Right there. So I'll want to see price hold that on dollar. Then after that, another thing is that daily fair value up to hold. So today, all these market moving lower might be just a wick being created. Okay, just a wick. I want to see it close inside that fair value gap. So once I have that in mind, the next thing is on a 4 hour. So on a daily, there are two PDRs that I'm watching: volume imbalance, daily fair value up. I want to see them hold price higher. So on a 4 hour, so, on a 4 hour, this is what I'm anticipating. I'm waiting for a fair value gap of this volume imbalance or that daily fair value gap. A displacement, sort of. So I want to see market does this. So if this daily volume imbalance holds, I want to see this inversion being invalidated, then another 4 fair value gap again being invalidated with a fair value gap created inside of this, then we move higher. So if this happens, then my sort of thesis my thesis of dollar going higher is still valid. But if it fails, if price goes continue going lower, then I'll have to react and adapt to the new changes, what price want to do next. Okay, I won't hold my opinion. In this market, you don't have to force if it's not showing you what it's showing you. So I want to see this daily volume imbalance, daily fair value fails, then I'll start thinking otherwise in terms of price. Okay, if it doesn't hold, then I want to see those displacements being created, fair value gaps being created, then I do what? Target lower side. So that's my outlook on dollar. I don't get married to my bias. So let's go over to indices. That's the lowest I can go. I don't want to go now 1 hour. Yeah, that's the lowest I can go. So ideally we already have like, if we start seeing lower prices, then what? This should be a breakaway gap. Hii hapa hivi with an institutional entered order flow entered rate higher fired. Sorry. So that is it. So if this doesn't happen, that's reacting off that invalidated this fair value gap, targeting this external range liquidity. Then what I'm anticipating is this market to take out all these lows, change instead of delivery fair value gap being left. Then appear, but most weekly candlestick have been closing above it. So apparently there's nothing interesting in it. So if price fail to give a fair value, then the next thing is seeking liquidity. and the next liquidity is here. So how will I approach this? So far we have an inversion, fair value gap there with a fair value gap inside of it. So if we are going to be pushing higher, I'll love to see market come back to the internal range liquidity and push for that. And if you're going to be pushing lower, I want to see market takes the external range liquidity, then reverses. So right now on a weekly, I have this external range liquidity, and I also have these inefficiencies here. So I'm in between. So whichever one they go for first, then I'll target the next one. So if market want to reach out for this or take out the short-term highs, things like this one here, things like last week's Friday's high, and this is our weekly inefficiency. On a daily, it's a balanced price range, that is, it was back forth, up forth, back forth, move, back forth, understand? That's what I mean by balanced pricing. So if I'm to trade on a daily, price will never go higher without coming for a discount or a premium. So if you're going higher, we need to seek some discount and raise, then you push higher. If you're going lower, then you need to seek some further premium arrays, external range liquidity, then push lower. So the first one you see they are taking out. If they take out this inefficiency with the Wednesday's low being taken, then Jua or market coming back to this fair value gap on a daily, then know that we are pushing higher. So right now we are trapped between this and external. Yes. Mm. Oh, a minute. There we are. Mhm. Yeah. Yeah, there you are. Mm. Yeah. So, mhm. Yeah. So okay. So mine is just here to watch this high. If this high is taken out first, then expect lower prices from external to internal. That's how you anticipate. So for me, today being Monday, I'll want to see a range. Come tomorrow, we take out that, invalidate this, and start pushing lower. So that's what I'll be waiting for. This fair value gap to be invalidated. Mm. So right now, there's nothing clear. Just to wait on Nasdaq. If you have these two, first one to be taken out, that's the one we go for. So let's see if we take out this, then we go. If they come and take out this first without taking that IRL and this one holds, then expect higher prices. If you start seeing this one holding without this external range liquidity being taken out first, then expect market kuangia huko. But if they take out this one first, Fridays, then this one to be invalidated, then you start seeking lower prices. So for those who are trading market maker model, I know you'll say, so to what extent can we go higher? This one here, even if you take it, the better. So we have all these external range liquidities, those buy side, buy side, buy side. But this one is the ideal one. It's more of a relative equal loss. So watch out. So for those who are trading market maker model, they can say this is the buy side of the curve, wherever it is. Then we start seeing the sell side of the curve. Something like that. Anyway, I'm not trading a market maker model here. For those who use it, you everything just align up. Me, I use liquidity and fair value. That's what price will do. Whether it is 2022 model you're using or TE, market does seek liquidity or offer fair value. That's all. So that's Nasdaq. If I go on a lower time frame like 4 hour, then I'll want to start seeing displacements. Sometimes doesn't mean that you have to take this buy side liquidity, but the moment I start seeing displacements from this, there's an OTE zone, optimal trade entry. Okay, right there. Let's measure it. We've really extended, and there's an higher time frame PDRA. So let's watch. I want to start seeing market creating some displacements with some BC failing, things like this failing. If this one fails, then the next one created, and to start seeing this failing, change in state of delivery, fair value gap being created there, then that's the simplest approach you can do on Nasdaq. You want to start seeing fair value gaps being created. So today, if we displace failing to take this ERL, it's okay, so long as we start seeing some, because you own a 4 hour, we already are in a higher time frame point of interest. Just a minute. Yeah, so if you start seeing some displacement, huge displacement leaving fair value gaps behind, then with some change in state of delivery on a 4 hour, this is what we mean. Look at the bodies of this with some fair value gaps being created, then that gives you an opportunity to look for lower prices going lower, forcing traders. For us who are using news, we'll trade after news, things like that. So this daily fair value gaps fails, and you come back to them, use them as resistance before you go that way. So no problem. Wait, if you still see them hold price, those fair value gaps, then still wanna see some extraordinary liquidity being taken with displacements as you continue. So those are the two scenarios. I'm still bearish on this until now. You start seeing displacements higher as running like this, fair value gaps, this fair value gaps, and that now you know that it's not easy. If you start seeing this failing, then know that you're going for midterm, short-term highs to be formed. If you see this failing, that means that market closing, candlesticks closing outside of it on a 4 hour, then know that we are bullish. Okay, yes, so this should be a breakaway gap ideally. If you have like 3 fair value gap, 1, 2, 3, the last one should be breakaway gap, and it's a balanced price range. Look at that. So let's see and wait, and start seeing these ones failing, market closing above them, then know that it's not easy. You're moving higher. So just watch. Today Monday, there's no news. It sets the range, the accumulation area. Then Tuesday you can take that high. Then start seeing some displacements going on to Wednesday. Then CPI you see some retracement, so a form of manipulation. Then we move lower. That's my outlook on Nasdaq. That's the approach. Today we range, take out that high of that range, then displace, leave some fair value gaps, which will act as our PDRA to sell off from. With these daily fair value gaps failing, then I'll be short on Nasdaq. If that fails, then start seeing things like this. Probably we create a range, create some range, take some lows or highs back to this daily fair value gap, then start seeing things like this fair value gap failing. Fair value gap failing, that is, we come back to this, support it, fails, offer support, then we target to close. Okay, so thank you. That's my outlook on Nasdaq. But everything revolves around dollar, how it will react. Yes. So long as we're still holding this volume imbalance, I have no problem with dollar. The wicks does the damage, the bodies tell the story. So wait for the bodies to close, and that is when you'll know. So use the same technique to look over power on these other ones. I don't trade them most, but still wanna see. We have Friday's low high being taken out today. Is okay. Then on a daily, is there any fair value up to the left or order block? Just a week with some sort of another block here. So that's the one to watch. We are respecting the midpoint. So far there's no close above it, so you watch. But ideally on a daily I want to start seeing this failing. This fair value failing. This volume imbalance failing. All of them failing. If I start seeing price displacements with a forward state changing state of delivery, then I'll be net short. That is changing state of delivery right here. Yeah, that one right there. So then I'll be net short. So if you start seeing this, then know that we are changing. Then we are delivering lower. You have a lot of inefficiencies here. So that's it. Watch out. But if you see this happening, market comes, get supported here, displacements higher, fair value gaps left, then know that you're pushing higher. So the major thing is this to fail. this daily fair value gap to fail. Okay, if it doesn't fail, then if it respects it, then expect higher prices. Other things to watch on Dow. Yeah, this external range liquidity right there. So Kush, I'm going to hand over gold for you. So we have there. Now, don't know what this is. It. We have this sell-off point that should give us some respect. If you start seeing market displacing from that, I want to see this respected. Yes. So displacements, change in state of delivery, we go. So this is my main focus. If you disrespect it, then that's what it is. I'm just changing my bias. I want to see that CB being respected. It's a daily fair value gap. So this one to be a breakaway gap up here. So let's watch how market reacts from that, because market will never move from nowhere. It has to go to a PD array, and that's our premium array. Gives us all the reason to go low. So if all this becomes disrespected on Dow, then that is it. So I want you to watch out. We already have some SMT here forming higher. Pound, not pound, I'm on ES, giving us that high. So don't be surprised if Nasdaq fails to give us a high. Don't be surprised if Nasdaq fails to give us an high, so that we just seeing some displacements, change in state of delivery, and we go. So don't be surprised. You can say that as an SMT. Okay. Ideally, that's what I want to see doing happening actually, and I'll be happy. Okay. So you have some SMT divergence. Smart money. SMR ama. Smart money technique. Smart money reversal. What's the difference by the way? What is the difference? Okay, Kush, you can do that. Huh? Oh, oh. So let's go through gold. Oh, so but you can walk us through. I can present the screen. Yeah, I'll do the presentation. Yeah, it's okay. Yeah. So here we are. Let me delete everything. Okay. There we are. Mm-hmm. Mm. Mm. Yeah. Mm. The weekly. Mm. Mm-hmm. Mm-hmm. The upper one or the lower one? Just just a minute. Okay. So from our daily, we have that fair value gap. Here, this one here, fair value gap. The long. Oh, okay, thank you. Sorry. Mm. Yeah. Like how price is reacting to that monthly constant encroachment with that order block. Yeah, it's a strong zone 4 hour. Here we are. Mhm. In case we fail to go higher, I'm not seeing any other fair value gap. But anyway, proceed. Mhm. Mhm. Sorry, just a minute. Uh, okay. So here we have a range. We have this low here, and we have this range here. And to the left, we have these fair value gaps. So if I may remove this, we have this fair value gaps. With another block. Yes. So either way, we react from that equilibrium, come to whatever fair value gap. So anyway, so you're looking at it in terms at a higher time frame point of view. Then what if, what if this order block holds this one here? It was confirmed. This candlestick closed above it. Mhm, mhm. And on a daily, it is so clear with the fair value. So personally, if you're saying there's no fair value gap on a weekly, I'll use that order block with this fair value gap. This is my point of view. So I'll say this. If I'm using ERL, IRL, I'll forget about this and use this fair value gap. Let me remove everything here. We have this fair value gap, right? So I want to see if this fair value gap holds. Mm, yes, yes. Even the cons content, of course, yeah. So from this point, target the buy side liquidity. Okay, that's my point of view. And if it fails to hold, then we go to hell. Yeah. So ideally, today is Monday, right? So we'll see how CPI comes in. So if right now we already have just one fair value gap that has been formed from a weekly fair value gap, which is this one here. So market came, it is placed from this, but we came in again into that fair value gap, took out this relative equal lows. See this? It was a clean, yeah, it double souped it. Then we created a new sell side. So there's already engaged relative equal lows. So we already had like, of course, we ranged a little bit. Then from that range, so long as market in a range, we had like an high here, and we had a low here. I remember Kush we drew this with you. You remember? Yeah, we drew this with you on that particular day. And tapped on it of that short-term consolidation. Let me try and see. Just a minute. I have something clear. So 0.5. Sorry, I've deleted. Let's have it. So 0.5. We have 0.5 with another block here. This is the only other block from it, from 0.5. That one there to the lower one. Just a minute. This one here, the lower candle. This one. hmm So we might on a 4 hour. Yeah, displacement from consolidation on a 4 hour. It was a short consolidation there. Come on, consolidation, consolidation. Then we do what? We displaced from it, created some fair value gaps along the way for content, then come back to it. Yeah, then we target took. Yeah, that's for me. That's how I look at it from a higher time frame. From weekly, you have another order block right there. That order block and that order block to hold price. If that fails, then we go on a daily and we measure the mean threshold of it. Everything points to that refinement yenye Kush ametupatia, that 4 hour order block huko chini. So I'll be interested in seeing that. So I'll use this as, even if the week takeouts everything, like we go deep, week it out, then we start seeing higher prices. And if that fails, then what next? We invalidate, inverse this order fair value gap. So this to happen, we see a close. Come on, we see a closer outside it with an OTE. I mean with a change in state of delivery. Then we take out that sell side liquidity into this fair value gap, second one. Then from there we start seeing displacements. Come on, displacements, fair value gap as we climb higher. So for me, I'm bullish. I'll be bullish in it. The fact that we held this fair value gap with a wick. If you look at that fair value gap, we went into it 3 times. It's a three whatever pattern. So you have this one first, then we came into this, which took out that many, then we came into this. So that's already a re-entry for smart money. 1, 2, 3. So we have no business of going back there. So the first one rejected. We had a rejection of it. Rejection of it. Come back. Rejection of it. Second rejection of it. So those are 3 times it revisited that. So I'll be bullish on gold personally, and the very thing that I want to see hold is its fair value gap. And if you're trading the model that I use, the ARL IRL, so I'll use this as my external range liquidity, this daily fair value gap. UG as my internal range liquidity, going into targeting this buy side liquidity here. Yeah, right there. So that's my outlook on gold. Simple as such. So long as you have a fair value gap with a change in state of delivery, that's we call it unicorn. If all those fails, then prepare to go lower, come back low. But that's a unicorn. 3 PDRAs, changes the order block, fair value gap, breaker, this one here. Or we can treat the two of them. That's a very strong zone. So if all that fails, then we go lower. Yes, we're coming off a consolidation. So apparently we are trapped. We have this fair value gap up here. It has already shown us a sign that we might violate it because we went through it. We went through it with a wick, but the body is closed back into that threshold. So all we need is come back and now finish kumalo. Yes. So that's my outlook on now. If that fails, simple. Fair value gap becomes an inversion, then simple to evil. Don't complicate Forex. It's so easy. So easy. Until you start complicating it. So that is it on gold. So watch out. Yeah. I think that is all I got. Any other thing is maybe look at pound, the last one. With dollar doing what it's doing. We are holding that volume imbalance. So what am I expecting? Pound to do what? From a weekly perspective, we failed to offer this fair value here. If you look at it from this point, we are way in a premium area. That high and this low, we're in a premium area. So we should be seeing some candlestick close below. So on a weekly perspective, just like dollar, that weekly fair value gap, we should be holding price. We have this order block here. On a daily, today being on a Monday, I'd love to see this hold price. And if not, since you're in a long-term consolidation, what you usually do is you mark the consolidation high. Sorry, there was the beginning, but now we have this new high here with a new high here. So we saw this being respected this week. The consequent encroachment of it was being respected. So I don't expect price to continue going higher. So what I'll do, I'll use this rejection block right there. So I'll want to see if market get rejected from that point, leaving a fair value gap. Yeah, even if it goes further, then I'll be interested in seeing this. It takes out this buy side, then we continue lower. Ideally hii ingine tumechukua, so this order block should hold price. Rejection block with an order block should hold price. Then if that happens, then what do we do? Displacement with this fair value of failing. This one here, the one that has this developing, so that what we have is change in state of delivery, then we target. If not, then this one to hold price. We hold price, take out that excellent range liquidity, then we start seeing price going lower. So with dollar doing whatever it's doing, if dollar holds, then I'll be interested in seeing this being an OTA. Vile Kusha ameisema tu, come back to 0.779, but this one should be using 61. This one here, yeah, that area, optimal trade, and already at it, so we should see price being resisted off that point, then we go low. Okay, so let's just watch and see what happens from this point of view. If that doesn't happen, then keep it simple. Fair value gap created, respected, then we target up. Okay, yeah, simple, but generally I'm still bearish so long as dollar respect that volume imbalance. So I'll want to see a displacement of this fair value gap created, then we target lower. Simple, simple, simple. Yeah, so we have a fair value gap here with the sell side liquidity. That's my weekly objective for pound right there. But I have to see a fair value gap being created there. So that is it. Euro dollar. So I finished this session. It's already past 1 hour. I wanted it to be 1 hour. On a weekly perspective or on a monthly. That's my dealing range. So where is 0.5? So we are at equilibrium right there in my dealing range. So what I want to see is we have a weekly order block that should hold price. This one here at the equilibrium, but I'll use the fib levels. We are at the midpoint of it. So if we go down to daily, is there any fair value gap? Of course there is. So we have a fair value gap here. So So that should be our ERL, external to internal to external IRL. So this daily fair value gap CB should be our external range liquidity. Then we target the lows, the sell side. So we need to have a news that, because it's going to be high resistance liquidity run, so we need to have a news that pushes it real fast, because you have to oppose all those. So from that point, this point, keep it simple right there. That's my outlook on euro, just like pound. So we already have checklist. Number one, PDRA to react off from. It's a premium level, and dollar is holding that. It's also at a discount level. So let's watch it fails. If it fails, then what happens? We want to see that fair value of failing, market close be above it. Then we just keep targeting higher prices. Simple. Yes. So that is it. On a 4 hour, let's see what happens. Probably we might want to take out this buy side liquidity. On a 4 hour, take it out. Short term range, because we've traded from that range since Friday last week. Is the other week. So we need to take, if you're trading weekly range or weekly profile, take the external of the range, then come for the another external and target lower. So I want to see that buy side liquidity taken out first. Okay. Yes. Let's take it out, then start seeing some displacement. Take it out, displacements, fair value gap, target. So that's my outlook on euro. So I think with that, that is enough. If anybody had a question, thank you for participating. And if you have any question, you can ask Vicky. Thank you. Wish anything to add, or you're good? Yeah, thank you. So let's see tomorrow how market holds. Thank you.